Welcome to my weekly review. You're looking at a weekly chart of the Nasdaq. Thank you for tuning in. I'm just going to go over a couple of the indexes and I'm going to get to the stocks here, which we're all interested in stocks. But anyway, I mentioned that the Nasdaq had gone up, 1,000 points, 1,000 points, 1,000 points every 3-4 months. And then it hit 16,212 in November of 2021. And it's been 2.5 years before it could make it another 1,000 to 17,000. This is, just another reason why I believe that, we're just starting in this AI revolution. And so this, leap from 16 to 17 took 2.5 years, whereas when we were in, a nice uptrend, it was happening much more frequently. Of course, if you look at the longer, trend from, 2008, 2009, you can see the trend. You can see these bear markets, which we have every, so often. That was a nice one, the financial crisis, and then the Fed-induced bear market with the rising interest rates. Anyway, I'll get back to the daily chart here on the Nasdaq. I just wanted to point out that from April 19th, it made a low there at 15,222, and then it ran up to 17,032, which is a 12% gain from April 19th to May 28th. 5-week stretch, and then last week we pulled back 1%. So if we're going to go up 12% and pull back 1%, 1.1% last week, I'll take that. I think we all will, right? So the 5-week run was broken with a 1%, drop last week, but it's not going to go straight up. But and selling is healthy. Pullbacks allow you to look at your stocks and find out where they're finding support, or if they're finding support at all. Some aren't. I'm going to get to that in a minute. But I also need to point out a couple of other things. The 17,000 could be a point of resistance for the Nasdaq. I'm not, usually these large numbers, do provide some sort of resistance. This is the Dow Jones Industrial Average, which hit 40,000 and then pulled back. Last week, 1%. You can see it hit 40 and then pulled back. So, yeah, those large numbers, they do tend to provide resistance. They can provide resistance. And this is SPY. I got to go to the weekly, as Phil Lesh and Bob Weir would say at the Grateful Dead concerts. We lost the great Bill Walton last week. He was a big Deadhead, and we'd see him at shows, but the crowd would, jam the stage and people couldn't breathe. They were so close to the stage and just jamming each other. So they would say, take a step back. So we're going to take a step back and take a look at the SPY here, which, if on the weekly, you can see that's just formed this little, this little consolidation period after it ran up and then pulled back last week 0.5% back to that old high. I better go to the daily chart. It shows it a little better here. You have right there at the 5,264, a little pullback, and then a reversal on Friday. To me, I thought the Nasdaq was going to go up on Friday, and we did rally on Friday. The S&P was up 42 points, and the Dow was up 500 something points, but the Nasdaq was down 2 points. The reason why I say this is because we had this strong rally, like I said, up to May 28th, and it sold off Wednesday and Thursday ahead of the inflation data, and the inflation data was tame. So I thought, okay, we're going to have a relief rally because that's out of the way, and it, it's the end of the month. So since it's the end of the month, strange things happen. There's rebalancing, and it's kind of mechanical. The trading, but since we're looking at the month, it was up, over 1,000 points or 6.8%. So you just got to take a step back and look at your. Don't sit there and stare at the screen all day. That's really bad for you. You're going to make mistakes. You're going to trade emotionally instead of technically. Just staring at the screen. I golf. I work in the yard. I have hobbies. I am retired, but I keep myself busy. I don't sit and look at the screens all day. I think that's really unhealthy to do. And like I say, you're going to cause some mistakes. I'm going to go through that in a minute. But anyway, enough of the indexes, enough of my running on and rambling. I'm going to go to stocks because we're interested in stocks. NVDA, yeah, it sold off on Thursday and Friday, but it was still up, I don't know, almost 3%. Yeah, 3% last week, 31 points. And you can see it just broke out of this consolidation pattern and then really ripped higher the prior week following its earnings reports. Now, this is my largest holding in my portfolio. Yeah, it was up 15%. A company that big, 15%, that's a heck of a move. But if you bought it at the beginning of the year, like 500, you got a two bagger and it's starting to get a little big for the portfolio. So sometimes, you got to trim when it's, getting out of hand. In 2023, I had more than 70% in NVIDIA and SMCI. So I had to, trim, obviously. That was too big. It was nice at the time, but yeah, it's kind of big. I got to be able to sleep at night. One thing about NVIDIA, we've never seen a company this size, nearly 3 trillion market cap, delivering triple digit sales and earnings growth 4 quarters in a row. This is really incredible. This is an incredible company. They're going to split 10 for 1 on June 10th. Yeah, I believe this thing's going to continue to run higher. 3 trillion doesn't have the same with inflation. It doesn't mean this is the same as it did in the past. But anyway, it's still very impressive for NVIDIA. And so I'm going to get to the good, the bad, and the ugly today, and then I'm going to go to some themes. But when you can own the leader like NVIDIA, why would you mess around with something like MRVL? They reported earnings, and I would say that is bad. NVIDIA is good, MRVL bad. And there's another semiconductor name you could own too. AMD's performed well. Some people think it might be a little better value than NVIDIA right now. I prefer NVIDIA. More larger, more liquid, better growth numbers. But Lisa Su and Jensen are speaking Sunday at Computex in Taiwan, I believe. And so they might have some news. I don't know. It could be a catalyst, new deals, new partners, new products. You never know. But they're both speaking Sunday. And another one that I like in this group, and I prefer, like I say, owning the leaders of groups. And I'm going to go through those in a minute here. But Broadcom just sold off. To me, this is a nice shakeout in the base here. You like to see the shakeouts before the breakouts. So, the last day of the month, there's, mechanical things going on with buying and selling and rebalancing. So I wouldn't read too much into that. And I believe Broadcom, if you just look at the weekly chart, this is a weekly review. You can see over time, this has done well for their shareholders. So anyway, I'm not going to go to ARM and ALAB and all the other ones. I'm going to move on because I talked about the good, the bad, and the ugly. And I'm going to go to the bad. I just showed you MRVL was pretty bad. Celsius, we had this on our ready list last week. Pretty decent looking chart. And that's a nice shakeout. Now it's below the 50. And so I've got to get rid of that. And sorry if you were into that one, but there was a Morgan Stanley report saying that there's slowing growth in Celsius. I don't know if it's true or not, but slowing growth for a growth stock is not a good thing. So you saw that nice little haircut of 13% this week. So sorry for the Celsius holders. So the good, NVIDIA, the bad, MRVL, and Celsius, and the ugly, flat out ugly is DELL. They sold off, 18% on Friday. The report was not good. But to me, this is bullish longer term because it just tells me that the AI play is just starting and all the spending that's being done is not starting to hit the balance sheets quite yet, but it will. And Dell's, according to Jensen, Dell is the king of, the servers, and the servers were up 42% in their defense. Server year-over-year growth was up 42%, which is not ugly. That's very nice, but it pulled back to its 50 and, found support. So that's not totally ugly. Certainly not like Mark Benioff. And the software names just got slaughtered. They had their worst day in 10 years on Thursday. I blame Mark Benioff. They got a 20% haircut. 20%. They lost 20% of their market cap in one day, which is pretty astounding for a company this size. This is a Dow Jones component. And another ugly stock that we saw in the software area is ServiceNow, trading below the 200. It got a nice haircut of 12%. Thank you, Mark Benioff. It's, Salesforce. Anyway, that's the good, the bad, and the ugly. And I have to get to my favorite part of the stock market, and in the retail. I love retail because it's easy to follow. I don't know what a lot of these software companies do, and you don't need to know what companies do if you can follow a chart. But I do like to look at themes and trends over time. And so if I look at Deckers over time, I could just look at a monthly chart and go, wow, this is the winningest stock of the 21st century. And, you know, you just buy it and hold it. It doesn't know you own it, right? Just buy it at any point and it's going to make you money. But, you know, you had to hold through some bear markets, right? Some nasty downturns along the way. But these guys are taking market share from Nike. And so this is a trend, you know, as we get these data points every quarter, it's telling a story. And Deckers is telling us a story that they're taking market share from Nike, which hasn't been innovating and relying on their Jordan brand for a long, long time. And the Deckers CEO, if you listen to the conference call, he talked about how their athletic shoe wear, the Hoka, is bleeding into a casual wear. So it's made for running and, you know, working out, exercising athletic people by Hoka brand. But now he's saying that the grandparents and kids are plunking down $150 just to wear casually. And you could see it, you know, just walking around town. If you're observant at restaurants and malls, just walking around town, you can see a lot of people are wearing Hoka shoes. And so they bought them for, gotta go to the monthly here. They bought them in 2013, so about right here, for $1 million, and Hoka did over 540 million in a quarter. So they're doing over 2 billion. So $1 million acquisition is turning into 2 billion a year. So that's one of the greatest acquisitions in the history of retail, probably the greatest. And anyway, Deckers is taking market share, and I would be remiss if I didn't mention On Holdings, which you know, is technically trading out of this IPO base and went through its due diligence phase, and now it's reaching its advanced phase. There's no telling how high it will advance during this phase, but they are taking market share. Once again, this is a shoe made for running, marathon runners, athletic people. You see them in the gym, but they're taking market share from Nike as well. And you can see their growth numbers here. And their earnings line, you know, just look at their earnings line. Their earnings line is going straight up, but they're being bought. You know, their athletic wear is bleeding into the casual consumer as well. So the consumer is strong as long as the unemployment rate remains, you know, at 4%. You know, people are working, they're going to be spending, and they're not only buying shoes, they're going to restaurants. And I'm going to get to this here in a minute, because I believe that Sweet Greens and you know, CAVA and Chipotle, they're taking market share. A more healthier option is taking market share from, you know, like Wendy's and McDonald's and the junk food, which is a good thing, you know, overall. Eli Lilly and Novo might disagree. There's enough obese people in the world. I'm going to get to that in a minute as well. But Sweet Greens, you know, this thing has gapped up several times on earnings report. Here it was what, March 1, a nice 28% gap. And then a couple of weeks ago, it gapped up following its earnings report. Yeah, May 10th. And now it's just forming this, like, I would call this a bull wedge or a flag type of pattern here. Yeah, just flagging out. So give it some time from this little, you know, breakout, pulling back to its 21, found support there on Friday. And yeah, I like this overall, this theme of, you know, I guess a healthier type of version of, you know, fast food, restaurant food, whatever. So you can see their earnings line is going north and the stock is going north. Another one in this group is CAVA, which had their IPO-based breakout here from right here. It pulled back to that level from that IPO base. You know, that's the, like I said, the shakeout, then the breakout, and ran higher. But once again, you know, up 11% last week with volume. They're taking market share, I believe, from, you know, like I said, McDonald's and Wendy's in the fast food. So it's a more healthier option. And I did mention Chipotle, which splits this week, I believe, the 7th, 50 for 1. So it's going to be what, a $60 stock, $61, something like that. And they're, you know, they have burritos, but not only burritos, they have a healthier option. You get salad or bowls with rice and beans and vegetables. So Chipotle is definitely, you know, King Kong of this group, you know, and you can see it's been a monster stock for a long time. So another theme that I'm seeing in retail is, you know, your stores, and you see Nordstrom's and, you know, Macy's, they're struggling, but you're seeing, you know, the Gap store. This was another theme, you know, that we're seeing over time, you know, if I go to the weekly chart, this is a weekly review, and you can see since what, last year, the middle of last year, this thing has been doing very well. The growth isn't that great, but the stock, you know, a move of 28% on Friday after just a better than expected report. But, you know, that's doing better than something like a Kohl's. I don't shop at either one of these places, but you can see Kohl's, this is a mess, chicken scratch. Anyway, another area, a theme that we're hearing at these earnings reports, if you pay attention, is, you know, Dutch Bros is taking market share from Starbucks. I don't think there's any doubt about that. It's got these, you know, growth numbers, and you got to pay attention to like these teen surveys and just surveys in general, because they lead to these earnings reports where, you know, we're seeing this growth, you know, 30%, you know, sales growth. Their earnings line is heading due north, and it's breaking out of this stage one base. So Bros looks good to me, and Starbucks does not. So some of these old stodgy brands, McDonald's, Starbucks, Nike, they're, you know, they're not innovating, and they're losing market share to some of these younger companies. And these are trends that we're seeing, and it's pretty obvious. We could take advantage of it. You know, if you like to buy technically out of a base, that's fine. If you just want to buy a stock and hold it for a long, long time, like a Decker's, you know, and you don't want to pay Uncle Sam as much in taxes, you want to hold for years and years and years, I think that's a, you know, a decent idea. Anyway, I mentioned a theme. Obviously, Eli Lilly and the Novo Nordisk have a duopoly on the weight loss theme. It's very apparent here. I think Goldman raised their estimates for the weight loss obesity market to be 100 billion. They raised it to 130 billion last week. I think they're being way conservative. Dr. Gottlieb, you know, says that, you know, that there's going to be more than 10% of Americans on weight loss drugs, and that's, you know, 330 million. You could do the math, 33 million people on Ozempic or Wegovy or, you know, whatever, Zepbound or Mounjaro, the weight loss drugs. And these guys are doing R&D, and they're going to develop more drugs for more uses like cardiovascular and kidney health. So these are going to be monster stocks. They already are. You can see the growth numbers here with Lilly. And if I go to the weekly, you know, the earnings line just ticking up, but we're going to need more than just these two. And that's where, you know, I got to show Novo, because I like this chart here. Lilly had that double bottom base, and this is more of a cup with handle type of pattern here. I got to go to the daily chart. This is a thing of beauty to me. Nice tight trading, pull back under the 50. It traded, you know, down 6 consecutive weeks. Now it's made the right side of the base, and it kind of handled out last week. It was down, what, 0.5%? There's your handle. But anyway, you can see the earnings lines heading due north. And if I zoom in here, you can see the 6 weeks of selling, profit takers, you know, people think the obesity trade's over. They just don't want to own the stock. And then some buyers come in, and it builds the right side of the base. And then last week, like I say, a little handle there of 0.5%. And Lilly and Novo still look like buys to me, and they look fantastic. And that's just a trend that's going to last a long, long time. They have, you know, 10-year patents on these drugs. And like I said, we're going to need more than just these two. And Viking is one that is expected to be, you know, this is definitely a speculative biotech trade. It has no earnings or sales, but you can see it made this big move on a trial, and then kind of is flattened out here. It tested and retested the lows here. Maybe you can see it a little better on the daily here. It made a low of 60, tested and retested here. So how come the shorts can't push it below 60? Maybe they will in coming days and weeks, but to me, the, you know, if it holds at 60, you know, they're going to have some catalysts here in the month of June. So something to look out for Viking. And then so that's the weight loss theme. It's going to be, you know, a long time. They're going to have, this is a trend. I'm talking trends here. And I think there's very sustainable trends in the retail space, which I just showed you. I think the AI trend and the, you know, the variable auxiliary trades around that, the networking, the software, the hardware, and then also the energy trades like CEG. These are trends that are going to, you know, occur for a long, long time. The CEOs of these semiconductor companies are saying we're going to need a ton of power. for this AI revolution to take place. And Constellation is one that's going to benefit from that. You can see on the weekly chart, their earnings line going north, the stock going north. VST is another one. And somebody told me that Jim Cramer pumped these stocks on Thursday and they sold off on Friday, but that's okay. There's people out there that like to short his picks. But Vistra is another one that I think is going to do well. And of course, Quanta Services Power is another one that's going to benefit from that trade. And then Sterling. So lots of trends out there, lots of themes. You just got to pay attention to them. And you can benefit from them. All right. So I'm going to get out of that area and go to just some strong stocks that I'm observing here. I'm not saying they're buys or anything, just an observation of the shipping stocks that are just, showing powerful moves higher. I haven't really looked at the dry bulk rates, but these stocks are going higher, so I can imagine that the rates are probably going up or have gone up. Zim broke out of this stage 1 base. It's got those David Ryan ants on the daily chart, and you can see this cup pattern and just a ramp higher for Zim. That's the Johnny Depp pirate trade. And then CMRE is another one in the group, Costamare, and then DAC. And I didn't buy any of those, but you could see they've had nice, profound cup-shaped patterns and took off. People have made a fortune buying out of those cup-shaped patterns. So pay attention to those for sure. I got to get to the miners, SCCO, Southern Copper. The commodity was down last week, but this stock was up 1%. And this is kind of a longer term theme. We're going to need these mining and metals. And somebody asked me to look at CCJ. This is a uranium play. See their earnings line, kind of choppy, but the stock just broke out of a base and running higher. I can see why people are asking me to look at this one. And what was the other one? FCX, Freeport McMoran, another miner. Yeah, I think these are just like in boxes here, like consolidating in a little shelf type box here. Yeah, it bounced out of it for a little while, but that's kind of what these are doing. SCCO, the same thing, just on the daily chart, just in these little boxes. I like it. They're, above 120. If it could break through that little box area, Darvis style. Anyway, it did for a little bit, then pulled back in. The copper commodity was down last week, as I mentioned. And I've got to get to a couple stocks that people ask me about. One is HUMA, Humacyte. This is definitely a speculative biotech stock, and these are the outhouse or the penthouse. So you're playing with fire here. This one is definitely in the penthouse as it broke out of this space and ran higher. It pulled back, 18% on Friday, but if you bought it down here before the breakout, you can absorb, an 18% a loss. So this is speculative play, but definitely, obviously breaking out of a, stage 1 base and trading higher. So that looks good to me, up 4.6% last week, despite an 18% haircut on Friday. And the other one was Vertex. Vertex, stock that I like, a drug stock. You could see, I mentioned, these cup with handle patterns. People made a fortune, buying these. 2-day shakeout, is that enough? Didn't even make it down to the 21. This is a strange stock. It marches to the beat of its own drum. I've tried to trade it over time and just, give up on it and put it away like NVO. So, and AMD, I don't even look at those things in my retirement account. So because I believe this is a quality company and it's going to trade higher over time, and it's been doing well for me, so I'm not going to complain. Anyway, that's it for me. Thank you for watching my weekly review, except for I lied. And one more thing in honor of the great Steve Jobs, I have to look at LULU, because I was talking about themes and apparel and Abercrombie and Fitch and Deckers and these companies taking market share. And I believe Lulu's losing market share. They're going to report earnings on the 5th, which is Wednesday, I believe, after hours. And it might, the sell-off might have been, may have gotten too overzealous on the selling, and it might pop with decent earnings. I don't know. It might sell off further, but it sure looks like a lot of damage is priced in here. There's some private companies that are definitely taking market share. If you go to the gym or you just observe what people are wearing around town, the Vioris, very popular. I went to the running store, and the salespeople there were really pushing it, and it's really, great quality, soft, material and absorbent, and you see them, a lot of people in the gym wearing those, and so I think people are getting away from Lululemon, and obviously with COVID over and people going back to work, you can't wear Lululemons to work. Maybe you can, I don't know, depends on your profession, but just not as many people wearing Lululemon, and just other companies, competition is coming for them, and I believe that'll show up in earnings over time. We look at their, their earnings has not failed yet. It's still heading due north while the stock is going south. So maybe the stock's getting ahead of those earnings. We'll see. And another one that's reporting is CrowdStrike. Just consolidating in a base. You can see their earnings line is heading due north. You could say this is an expensive stock, 75 billion market cap, with a few billion in sales. So I don't know, maybe the multiple will contract here. I don't know. We just have to wait and see what they have to say. I believe this is the strongest of the cybersecurity stocks. I believe they will report strong earnings. I don't know how the stock's going to react. If I had a crystal ball, I would be able to tell you who's going to win the World Series this year, but I can't. Anyway, probably the Dodgers or Yankees. Anyway, that's it for me. Thank you for watching. I'll have a ready list because I'm seeing a lot of stocks set up in bases here, and I'll have a new ready list on Monday. I think we'll have a better week next week. We have the jobs numbers on Friday, and that's going to impact, the Fed and all that good stuff. Anyway, thank you for watching at mcstockcharts.com. We never give up. Have a great weekend.